the expectations built into these reports are not the thing that moves them the most. And it's going to be interesting to see today if soybeans, in my opinion, have kind of been the focus of this report. And Sterling and I talked a little bit about that. Sterling, before we kind of click the official start button here, what's your dark horse on this? What is the swan that we need to look for?
Well, the beans have gone up an awful lot, pushing $14. $14 beans and a 400 plus carryout do not correspond. Yes, right. We've had problems in Brazil, but the people in Brazil are saying the problems are a lot less than what we should expect and what the market is priced in. My thinking is maybe we don't see such a shocking move on that ending stocks number for soybeans. When you were around last month, we were kicking around this idea of 500 million tons. The biggest expectation for this report is a little over 400. I'm noticeably lower. I'm sitting at 310. In part, the USDA doesn't have a real history of jacking up production numbers that much. Yeah, they go up, but it's not, enough to really move the ball. And the second thing, we have seen really good crush margins, and up until the last couple of weeks, really good exports of soybean meal. And if that's the case, then we're crushing more beans. Well, you add that back in, maybe you tweak exports a little bit. All of a sudden, maybe, that 400 number may be even a little bit big. So that's in one spot I'm looking for a surprise. The other big question is, corn yields. How much are they going to move corn yields? There's a lot of ideas out there running around that we're going to move this corn yield number. Right now, we're at 177.1. Last time we were at 177. Historically, yields, the USDA on this report historically has cut yields a little bit. That's the historic norm. And we'll see, exactly what they did with acres and everything of that sort. But here, let me pull up my balance sheet over here on my other screen here.
While you're pulling that up, Sterling, Christy, why don't you go ahead and officially kick us off, and let's hit the record button so that if we do have some folks that are watching this afternoon, kind of get the full story.
Well, I tell you what, I went ahead and started record because you guys start way too early with great conversation, and I always hate to miss that. So, but I do want to welcome you all. Thank you so much for joining us for today's big report. This is the big one. This is the WASDE that comes out every month, but today we know this is the big report. And you have Brooks York, who is our director of what is it, Brooks? What is your title?
We're director of ASNA Edge. So this may be one of the first few meetings where we've used that term ASNA Edge. For most of you, you might recognize the producer services group. Just a little bit of a new look, a little bit of rebranding, and this is kind of our last breath in the office before we hit the road on meetings. So we've got a very, very busy meeting season here over the next 60 days. So the next time you see us, which is third Thursday, it may be someplace. So it may be in a different atmosphere. I think I've got third Thursday, if I'm not mistaken, from maybe Ohio next week. I'm not sure, Christy. I go week by week and day by day right now.
Yes, we've got Brooks and Sterling on a really tight schedule. Yes, Brooks is our director of producer services, and he is overseeing our ASNA Edge group right now. And we have renamed that. He will be in Ohio during that monthly meeting, which will be in just a couple weeks. Actually, just next week.
Next week, yeah.
Stay tuned and watch for that. And Sterling Smith, who is our director of ag research, he is with us too. And you're actually looking at his screen right now, and we're going to be watching that. He's going to show us what happens here in just a few minutes as the report comes out live. So I'm not going to talk anymore. I'm just going to let them take over. So you guys take it away.
Well, like we were talking about earlier, Christy, before we really officially got kicked off, it's a lot of times what people expect to happen in a report may not be the spotlight or the market mover. And we've certainly proven that these WASDE reports have created some volatility over the last few months when they've been released. I think leading up to this one, something Sterling and I have talked about is the focus seems to be on soybeans, two specific things: yield and obviously what Sterling referred to, carry out. And Sterling, I think do you have a balance sheet? I've got one on my screen. Do you have a balance sheet in front of you?
Yeah, I have it. I can share it if you like, I think. Can you guys see
I think
this?
that would be great. You know, a lot of times you and I talk in millions and billions, and then we switch over to acres, and we maybe get ahead of ourselves a little bit. But you mentioned a 400 million number, and of course, I know you're referring to carryouts. Do you mind walking through the audience with where we think we're at now, why that's such an important threshold?
Christy, can you see? Are you still seeing the scoreboard, or are you seeing a balance sheet?
See the balance sheet.
Perfect. So what we have here, and we'll just go through this line by line real quick. We have how many acres got planted, how many we got harvested. We multiply that by the average yield, which right now I'm thinking we're going to be at 51.3, which isn't too big of a change from the last time. You know, I shaved a little bit off. This is the last USDA report. So I've actually got production basically about the same. Where it gets interesting is what we do with the stuff after we harvest it. Some of it gets exported. As you can see, I increased exports just a little bit. Number I'm interested in here is this crush number, 2215. That's up noticeably, and that leaves us the beans left over after we crush them or send them away at 310. So that puts me, the highest number for the street guesses on this was about 411. The lowest was coming in about 300. Now, when we were having our last meeting, we were talking about this number being 400. There were even some 500 number guesses. But when I put the pencil to the paper and looked at the historic changes in yields, unless the USDA makes a historic change in yields, or we magically found a whole bunch of new acres, which I really doubt, it's going to be really hard, I think, to get that number up. In fact, I have them cutting ending stocks, which would kind of correspond with the price action that we've seen going on within the soybean market. As you can see, over that holiday period, we had a nice little bounce and took us up to $14. Now, a 400 number for ending stocks does not correspond to $14 beans, does it, Brooks?
It doesn't. You know, I think as we look at this thing, you got to kind of put this in perspective. And I know the 310 and the 400 are not numbers that a lot of you see every day. It's something that Sterling and I follow every day. So to kind of put this in perspective, most of the previous 12 months, if folks were looking at that number, if they saw a 310, that would be a big surprise of high supply. So we spent the last 12 months kind of living on the edge, if you will, where we thought maybe carryouts might be as low as 120 last year. So 120 million bushel beans left over. Instead, if you look at Sterling's sheet right there, you're going to see that carry in at 256. So we've slipped in some bushels and gained some supply over the last 12 months. So that carry in went from what we thought was 120 to 130 to 256. So we started off with a few more beans in our bucket. Today's report, I think if you look at one thing out of this report, I think you have to look at that yield possibility of a yield change. Sterling's got it at 51.3. Sterling, you've used history in this number a lot. It would be going against USDA historic moves to take that thing much above 51.3. You want to elaborate on that a bit?
Yeah, historically, the USDA doesn't change these yield numbers that much. You know, usually 2 or 3/10 is about the maximum, going either up or down. And to get us to add 90 million bushels on that, we would need to, you know, probably push that number in here. Actually, what I can do with this is a live sheet. If we were to see a 51.7, that gets us up to 344. Well, again,
that would be kind of a high water mark, wouldn't it? I mean, unprecedented if it was 52. 51.7 is not out of the realm of possibility. Would be sizable.
51.7 would be the far end of the range.
Yeah.
You know, and it's also entirely possible they could cut it. That could happen. That's not necessarily out of the question.
And that would be a big surprise to the market, and it would support this $14 number. Let's talk about one other number on here, because the CONAB numbers that came out of Brazil have a big impact on that export number. And I think there was a chance 60 days ago that that 2.05 billion estimate on exports, so that's soybeans leaving the United States, had Brazil come in with some surprising yields, some higher than average yields, we could take that export number down. You'll notice that we have not done that. However, we haven't adjusted it a lot. Tell us, Sterling, how these CONAB numbers came in. I know there were some bulls out there that are really wanting to play on the South American problems. There wasn't a big change in those estimates. Give us your feedback on that.
The street was all bowled up. They were looking for 135.82 million tons being produced. The last report came in at 142.79 million tons. The previous report, the current report that came out yesterday was at 140.50. There are problems in Brazil, yes, but they're in the far, far south of Brazil. Those are not the main producing areas. Things in Mato Grosso are going pretty well. There's also moisture in the forecast for those southernmost parts down in Paraná and Mato Grosso do Sul. So they're soybeans. The beans down there are a little bit later than the ones up in Mato Grosso. They're not as far along. So a little bit of rain, as we all know, can help out those production numbers. So I would not get too hung up that we're going to have a disaster in Brazil, because it's becoming pretty clear. Yeah, we may not set a record, but we're going to be bringing in a whole lot more than we brought in last year.
So Sterling, kind of put this in perspective in those southern areas, and remember we're reversed, so it's kind of like our further northern areas. They are experiencing some high temperatures and some drought conditions in an early July time period. You can essentially add kind of 6 months to our calendar. I think a lot of us kind of recognize that, August rains can surprise us in what they can do to a bean crop. Not any different than what, late January through February rains can do down there. So there's still a chance that those beans are maybe a smidgen better than what we want to think they are at this point in time.
And keep in mind, as CONAB reports historically, bean crops have a way of growing down there. They don't grow, the numbers don't get quite as big through the report cycle here, but down there, as they start harvesting them, they discover the beans. Every bean's a little bit chunkier, a little bit heavier, and guess what? Those numbers have a way sometimes of creeping higher. So if we see some material rains in here and things work out, we could add 1.5 million tons of soybeans in there, and that's enough to start kind of tipping our balance sheet a little bit. Now, the dryness in Argentina. Argentina is always dry. That's just how it is, and that's always a complaint that goes on. Argentina exports a lot more soy meal than they are a big primary soybean exporter. And we've seen up until the last couple of weeks really good soybean meal exports out of the U.S. So that's something that could be kind of bullish for our balance sheet and maybe not such a big deal for Argentina. And some of that may be already priced in. So again, our risk is, really where that ending stocks number for soybeans come in.
Yeah. You don't want to overstate this. And sometimes these reports are yawners. They haven't been the last couple of times. They have moved the market, but we're truly at one thing that Sterling and I have really talked about over the last 4 weeks is that regardless of where prices are at, there's opportunity when there's volatility. And over the last 4 weeks, and we've got about 2 more weeks, in my opinion, left in this South American volatility packet where there's opportunity for American farmers to price soybeans. Sterling said something that was correct about a year ago. He said the markets, they don't necessarily not like bad news or good news, but they react with high volatility to uncertainty. And the closer we get to this ending period of Brazil, uncertainty diminishes and volatility certainly comes down. So great opportunities right now if you're a farmer listening to this or an agent You've got a couple more week window, but it sure feels like this WASDE report could be one of these swing reports, Sterling. The next time we meet next month, we've got this volatility behind us. We've got kind of confirmation of what we had in the U.S. We're certainly going to move into a time of more certainty in the world until we start looking at acres in the U.S. and things like that. Good opportunities the next 2 weeks.
Yeah, and I think we're, if we get through this report without any problems and it doesn't knock prices down, if you've got old crop corn at $6, hey, there you go. If you've got old crop beans at $14, bless your heart, there you go. Your risk at $14.06 is pretty much tilted more to the fact that you have more downside risk than really upside opportunity. So I wouldn't be too worried about, locking up $14 beans. And then this is all over, we'll have the USDA outlook report coming up. We'll have that May WASDE where all of this is going to get reset and we're going to be back to a whole new game and everything's going to be different and we're going to have a whole different weather paradigm. So for the stuff you've got on right now, I think that's good. If you can, if you've got things to get rid of, I think I wouldn't be too terribly worried about. Sell $14 and they go to $14.10, I wouldn't cry about it,
At some point in time, and in a lot of parts of the U.S., we did have really strong bean yields. I know there's some pockets, I know there's some people that are on this call that did not, but the math works really, really well in a lot of cases. $14 times whatever that final yield was, it looks good. And it's something funny about the balance sheet, Sterling. Whenever you look at missed opportunity, if you sell at 14 and the market goes to 450, it doesn't seem like it added that much money to the bottom line. But boy, when you take 14 and you put 13.50 on there, it seems like it stings a little bit more.
Well, yeah, and remember, there's a difference between being unright and wrong. Unright is you miss a little bit of a move. Wrong is you miss the move. Or you're in the wrong position and it works against you.
I think what you said right there may be the most important thing that everybody hears today. You're not wrong at these levels. Let's look and see what the market is anticipating. We're currently down 4 to 5 on beans in the nearby months. Corn's down 3. Wheat also trading 3 lower for when you're getting some numbers right now, it looks like.
Let's see, we'll be getting the numbers in about 15 seconds here.
15 seconds away.
Right
So
there,
again, market
right
trading.
there, I'm highlighting the ending stocks number for soybeans. Right there, it's line 47. So
as a reminder, that 340 is what we're looking at there on soybean ending stocks.
350.
Like 350. So we're going to see
the
market
street hit it pretty much right on the button.
Market had a violent reaction for seconds. We're down 9 to 10, now trading 5 lower, now down 20 nearly. So a very volatile trade. We're taking a look at corn. Do you have some corn information?
The corn ending stocks number came in 15.40. That's a miss of 60 million bushels to the upside. So a little bit more corn on hand than what we expected.
Overall, that's I think that corn number at 1.54, that's a threshold that we haven't seen. We talked about that magnet pulling carryouts up to a comfortable level. It's pulled them up a little bit faster than maybe what we thought. 177 on yield is right on the money, no change there.
And let's see what our soybean yield was. That was a soybean yield 51.4. So again, they only raised it, last time it was 51.2,
yeah.
So they only raised it 2 ticks. And the soybean production, 4.435.
While the market is weaker on this, I think that there was an expectation of 400 million, and now we're seeing beans trade back only 3 to 4 lower. And again, I think the market had in mind, while this is not a bullish report by any means, I think the market had in mind 400. We're getting ready to trade positive numbers on beans, it looks like. We're down 2 right now, down a penny. it may very well turn green here shortly. So very, very interesting turn of events after this report. Again, 400 million, not the case, even though we did increase to 350. Not as big a change as I think what a lot of people thought.
Yeah, and keep in mind a change from here. Let's get back to the ending stocks. You know, a change from 350 to 340. That's not quite a rounding error, but it's pretty close to a rounding error. It's not that much.
Right.
You know, a little bit of better export will move that number back up, and we'll have to break down and look at all the details. But again, the production number, you know, only up by the same amount they raised ending stocks. So that tells me, without even having to look, that they didn't change anything else in the report.
So we are now up 6 sterling, 5.5 to 6, 6 3/4 higher nearby beans, now 7. So the market had a big initial sell-off and now firming up quite a bit.
One other thing we had today, we also had a quarterly stocks report. And I think our surprise here, we had wheat quarterly stocks come in a little bit under, bit of a surprise there. Corn quarterly stocks are pretty much right as expected. And the soybean quarterly stocks a little bit higher. So that quarterly stocks report, I'd call it neutral to a little bit bearish, maybe just a smidge. So that's something else that came out today. This report, though, we've got a full tank. How that goes through the following months is really going to be more important.
You know, this may be one of these reports, Sterling, and if you look at the end of the day, if you forgot it was report day, and you look at the end of the day trade, you might think, well, it was a hum-ho day, not a lot of information out there. There really were some, I guess, I think the thing that probably one that surprised me the most is that corn carryout at 1.5. I have to dig into that because there wasn't a yield change. It doesn't look like an acreage change was in there. That must come out of exports. I'm going to make that assumption. That has to be where it's at.
For what? For beans?
Corn. No, on corn. The 1.5 number is the one that probably surprises me.
I should have corn exports here. Let's see here. We've got corn exports. 2425. They cut them.
No, that's really right. That's really right.
That accounts for your difference. Yep.
Yeah. Yeah, it's really right on the money.
Now, we can take a look here. More and more, and you're going to see more of this coverage going on in the materials I send out, but looking at the global situation, corn, let's see, corn ending stocks. Let's see, world corn ending stocks. Looking for 303, we came at 303. For soybeans, though, we were looking for 99.73 with a prior number of 102. That number came out at 95 million. So that number is actually kind of bullish overall. Because that's a pretty good offtake. That's, 6.5, 7%. And the wheat number came in pretty much as expected, and the cotton number is a little bit bullish. So
got a lot of wheat folks on here. Let me give you an update on wheat. Wheat has never been able to bust out. We're down 5 to 7 pretty much across all the indices on wheat. It stayed very, very consistent. Just not a lot of surprises there.
Well, the wheat market's had a problem, and the problem is actually in Minnesota. We've seen Minneapolis prices come off sharply. We've seen a lot of funds selling, funds adding to their traditional short position, and that has taken wheat prices down. And then as they go down, it's going to be harder and harder to get funds in here to actually buy them. So we're entering a situation with the wheat market where the bear is kind of taking hold. And one thing, if you're in the corn and soybean world, we have big fund positions, particularly for corn. If we start to see that position erode, prices are going to erode with it. And something that could cause that is global macro volatility. And that's something I have every bit of radar I have watching for that, because we're seeing things change in terms of interest rates. We're seeing interest rates move in a different manner. And that's something that these global macro things will affect fund behavior. And when you affect fund behavior, you're going to affect board prices.
So all in all, I think you leave this with not big changes on carryouts in regards to soybeans and corn, but slight upticks. Okay. What that does is does that make me a raving bull, even though the market has reacted higher? It does not. It makes me feel like we know more about where we're actually at. Again, the fewer surprises to come in the future, the less volatility we should see. Great opportunities on old crop, great opportunities. One thing that we skipped over, but processing margins on beans are strong. It should lead to fairly strong and robust domestic basis that we see on the interior. Exports still look pretty good. That 2.055 number, that's billion bushels of beans we're going to send out that Sterling talked about, should make competition on the river system or the Pacific Northwest as strong as it can be. So bean basis should be robust. Again, 2 more weeks of a strong volatility period in South America is key. I'm not so worried about old crop, because I think what you said, Sterling, is you can be unright and you're not wrong. You can sell these beans at a profit. I can't ever disagree with anybody who wants to sell beans to lock in a profit. More importantly, we may see it if you haven't made new crop sales on soybeans. These low 13s on the board look like maybe a beginning opportunity. And I know inputs are ridiculously high in regards to, fuel and oil, fertilizer, chemical. I mean, big increases over last year. What you don't want to do and what you can't afford to do is, remember, like Sterling said, you can be unright. But what scares me about this year is you can seriously be wrong when it comes to marketing when you put so much into this crop. This isn't, in some cases, this is more than a little setback. I never thought in my career in here that I could tell you that even with protection from crop insurance, your losses per acre could be pretty extreme. When I started, Sterling, I think for $250, you could pretty much put out your corn crop. And we've talked about it here over the last month, where a lot of farmers will have well over $1,000 when you include everything, land costs, utilities, everything that goes into that acre. To think that they can lose $100 and $150 easily, it's not something I ever imagined saying, but it's certainly something that can happen this next year. So I really like these next 2 weeks to maybe start throwing some hedges on, especially if you've already invested in inputs for next year.
And something else that we should probably talk about when we're talking about input prices, and nobody's going to like what I have to say here, and you're not going to like what I'm going to show you, because it's not good news, but it is reality, and we have to live with it. And this is a chart here of crude oil. And if you follow the stuff we put out, crude oil prices are back to $82.87 a barrel. In fact, for this February futures contract, we're making life of contract highs today. Normally, when we're at high prices, I don't like being a raging bull. That's bad news. But when we've had a breakdown here, we had our nice little correction, and now we're moving back higher again. If we can hold above $82 a barrel, don't be shocked when we're doing this, when we're talking in March or April, seeing this at triple digits, $100 a barrel. That is not out of the question. This market has been very firm, and some of the underlying indicators that I look at, like equity prices of energy companies, doing really, really well. That means there's a big expectation that these prices are at least going to hold, if not move higher. So this is something where, again, input costs are going to be a big problem. I know natural gas has come off. It's also starting to bounce once again and move higher, as we've seen, some rather nasty cold weather. The other thing that we want to talk about here, I'm going to show you a picture of interest rates. If you need to lock in money, if you were around 3 months ago, I strongly suggested that any borrowing you need to do, you get it put in place. As you can see, interest rates were down a little bit the last couple of days after making another new high. My guess is we're going to have a band here of 170 being low, 180 being the high for 2 to 4 weeks. We're going to suddenly find that band being 175 to 185, if not 190. We had an inflation number today. It was CPI. It's the junior inflation number. In my view, it came out at 7%, as expected. Tomorrow, we get a producer price number that shows inflation that's going into the economy and manufactured goods. The overall expectation for that is 9.8%. If that number misses by just 2 ticks to the upside, that's double-digit inflation. And that is going to get people's attention, and all that global macro volatility I talk about, that could take hold. Furthermore, those PPI numbers are going to have that little drop we had in crude prices priced into this round. When we see these numbers for February and March, we're going to be featuring that nice, lovely new $80 and higher crude oil, and that's going to push those up.
Sterling, I think that this morning that number at 7% that came out, I believe, if I'm not mistaken, the highest since 1982. In 1982, if memory serves me correct, we were looking at a completely different interest rate chart. And there's always fear that when the government steps in to take action, there's a knee-jerk reaction. If you're in Washington right now and you are looking at policy, you're concerned about inflation, what are historically the steps that have been taken to curb this inflation? What's the most likely tool the Fed is going to use to do this?
The Fed has basically 2 implements to tighten monetary policy. Basically, they want to increase interest rates. Number 1, they can go in and raise the Fed funds rate, which right now we have 4 rate hikes priced in for the year right now, and I'm going to run some numbers and some stuff and look at that to see if we're not beginning to price in another one. The second thing is the Federal Reserve has been in here buying bonds. It's called quantitative easing. The Fed balance sheet is now $9 trillion. That means essentially of our $31 trillion national debt, the Federal Reserve is holding $9 trillion of that. Now they have a process called runoff that they're going to use to shrink this balance sheet. What that means is bonds come due, they're not going to come back in and buy them back, and they're not going to be reinvesting the interest they collect off of that. So those bonds are going to have to come into the marketplace. And when that happens, you need to find buyers, and you'll see bond prices slowly erode, meaning interest rates go up because they're going to have to find buyers for these bonds. So if we begin to see inflation, crude oil hits 100, stays north of 100, the Federal Reserve is going to pick up these activities, and that will create a situation where we'll see interest rates move up noticeably quicker, and the markets do not handle that very well. There's an idea about where interest rates are going to go, but when they move up sharply like they did last week, you see all that crazy volatility we had in the stock market, the last 5 sessions. And it's really still going on today.
It's going to be really interesting to see how this plays out in the ag world. I know a lot of you listening have heard some unbelievably high land sale prices. We've got a farm that's going to be for sale here in my home county of 270 acres. It's projected to be probably the highest per acre value at a sale. It's going to be interesting to see. While you're looking at interest rate numbers on here, it does seem like maybe they've ticked up a little higher in the cash market, sterling, when it comes to things like buying this land. I think it's going to be a while, though, before they affect really the price of this real estate. Any thoughts on that?
Well, what we've seen in the mortgage market is interest rates have moved up for a 30-year mortgage, up noticeably. They're now pushing about 3.6%, up from about 3.2%. To put that in perspective, when I bought this house in June of last year, I locked in a mortgage at 2.70%. So those are moving up. And what happens when interest rates start to move up, initially everyone comes in and tries to buy a house, or they try to buy land, whatever it may be. That creates a bidding war, and that drives prices up. Then interest rates move up further. Well, guess what? That land becomes inexpensive, and that becomes too expensive, and you see prices start to erode. So that is, probably the potato we're going to be playing with land purchases. And I know things here, I was kind of nosing around looking at some land in western Douglas County. not so much on the idea of farmland, but on being future suburbia. And in the corridors where I expect to see, growth in 10 or 15 years, those prices are untouchable around here, just out of sight.
Pretty interesting. I think third Thursday being next week, I think one of the things that we really need to touch on, Christy, is a couple of things that we talked about today, and that's these inputs for next year. I think they're at a very, very serious level. And what I mean by that is as agents, we pride ourselves in being able to protect against disaster. We've done that in 2002 and 2012 in my neck of the woods. We're in a situation right now that we can protect a huge amount of dollars per acre, which what historically would seem like a tremendous amount of dollars per acre. But there are still chances for significant losses, even with the protection that we offer. And it's one of the things I'm going to talk to Elliot a little bit this week and talk a little bit about some supplemental coverage that's out there. I know a lot of people look at that initially and maybe turn up their noses at it. But when we're putting $1,000, $1,050, $1,100 in a corn crop, and if you throw land cost and machinery and the whole ball of wax on beans in the 700s in a lot of part of the country, it could create some serious times if we don't see follow through and continuance in these market prices. And while we didn't see big changes today, it's something that I talk about in all the meetings that I do out there. There's a couple levels that make the market feel comfortable with supply. So if you think about the old school scales that are out there, there is an equilibrium out there. And the pendulum is moving slower than it has in the past. But over the last 12 months, if you watch these WASDE reports, if you watch the third Thursday, Sterling, we've seen that pendulum seemingly hit an extreme level on bean supply, maybe 120 million. And if you would have asked either one of us, would we be at 340, 350, 360 today? I think we would have said it's unlikely. It won't swing back that fast. Regardless of small adjustments, the pendulum is starting to swing. Today, the big surprise I saw on this, I know it's not something we dwelt on earlier, but that 1.5 billion bushel corn carryout number to me is significant, because we felt as coming into this thing, Sterling, maybe as low as 1.1, then we were pretty sure a 1.2.5. We kind of settled in the 1.3s, and then maybe we edged up to almost 1.4 billion and printed at 1.5 shows that pendulum start to swing back just a little bit. And it's got me spooked a bit, not for the next week or two or anything like that, but long term, the market's doing what it always does.
Right. And we're now soybeans at 300, 340. That's comfortable. The market is comfortable with that. And we're seeing elevated prices. The 1.5 on corn, we're getting to the lower end of comfortable, moving closer towards comfortable. One worry, and we should think about this and make sure to watch my reports on Thursday about exports. Corn prices are noticeably higher. Export sales the last 2 or 3 weeks have been bad. That's the only word I can use to describe it. Bad. And all of a sudden we find maybe, China was in here last year buying corn great gangbusters, and January, February is when they came in and bought it. Those Brazilian corn production numbers are way above what they were last year. Yeah, they cut them down from expectations for this year. All of a sudden we find ourselves with a lot more corn. All of a sudden that 1.5, it wouldn't take too much in the subsequent reports leading up to the May WASDE. You add, a couple hundred million. You shave a couple hundred million off of exports, which that seems like a lot, but in the world of corn, it isn't that much. All of a sudden, you're now sitting at a carryout of 1.7. 1.7 moves, it takes us right to comfortable to starting to get a little fat. And the market may not like that too much, especially combined with those large fund positions.
It's funny. We look at a lot of these things in hindsight. I know we've got to wrap up, Christy, but we've still got all of our listeners on here. It's funny how when you look back at supply and demand charts, you could easily tell a story that's awfully, awfully tough to tell in real time. And I talk about this a lot, but in 2008, whenever the ethanol mandates were out there, and you felt like, how in the world can we add 3 to 5 billion bushels of demand and meet that demand? How can we do it? And then if you'd have told me that in the next 4 years, you're going to see a 100-year drought across the United States, which happened in 2012. If you'd have put those two things together, I'd say we can never supply the market. And yet by 2014 and 15, sterling carryouts nearly 2 billion bushels. So the unlikely seems to happen. We're not trying to predict the markets. We're just telling you historically what's happened. And that pendulum is starting to swing back, maybe a little bit more rapidly today than we thought it could over the last 12 months.
Yeah, and understand right now the world is awash in cash. Everything is flush, household balance sheets, everything is flush with cash. When the Federal Reserve comes in here and starts turning that nozzle back because they have to be, because of inflation, well, the world's not going to be as flush with cash. And that is going to be, how the Fed handles this is going to determine whether, how 2023 is going to be. Are we going to see a soft landing and it's all going to be relatively happy and good? Probably not at the current sort of happiness we have. Or if they get something wrong and all of a sudden, we're looking at the S&P at 4725 right now. Instead, we're looking at S&P at 3200 and we're looking at 10-year rates at 3.25. That's going to mean a whole different thing for all these commodity funds that right now are doing a good job of helping out the American farmer. They are keeping prices elevated.
Interesting perspective. Christy, I think we've really kind of given all the words of wisdom we can give for a day, and we're a little bit over our time limit. I appreciate everybody tuning in. Great to have everybody's attention the whole time. And we're going to see you next week, I guess, in a third Thursday marketing meeting. We're going to talk about inputs at that point in time.
We're going to talk about inputs, and we're also going to have some inflation numbers under our belt, and we're going to have some new ideas about the Fed as well that we're going to talk about.
Yeah, you guys checked off everything that I was going to talk about. I had that 7% inflation number that I wanted to talk to you about, and all the other reports. You guys checked them all off. You guys did really, really good. Thank you so much. And yeah, that 1982 year, that hit a thing for me because we were farming then. So thank you, because I was farming then. That's when I was on the farm. So thank you for doing that.
Christy, one of my brokers in Chicago thinks this is awesome.
Yay! Thank you, Matt. I see that. Thank you for joining us today. Guys, we really do appreciate you being with us. Watch social media and watch Sterling's reports and our DMOs for when the for all the links for the next third Thursday, because that will be next Thursday. And we want to get you registered for that because we will talk about inputs and we will be talking about this inflation number and everything else that's going on with it. What did we learn in 82 that we can use so that we don't, have what happened after that? We've got a lot going on that we've learned that we can move forward and not that we can learn.
And things to think about interest rates. Think about where they were in 1982.
Right.
We weren't running $1 trillion deficits. We didn't have $1 trillion debt.
Right.
So there's going to be a cap. There is going to be a natural lid on how high the Fed can actually take interest rates before it starts wreaking havoc with the budget. Yeah. So very, the Chinese saying, may you live in interesting times, is not actually a blessing. It's a curse.
Yeah.
Right. Well, we're going to get this information out. We've got a big report. You're going to do a DMO today, right, Sterling? You're going to give a recap of all of this.
Something we're adding to the DMO on Mondays and Wednesdays. I'm going to be adding market overview, and I'm going to cover each and every major commodity market. So
that's going to be awesome. So thank you all again so much for joining us. Really appreciate that. We've got so much good information. This has been recorded, and it will be available on our YouTube channel. and in the next DMO, hopefully in the next one today. If not, it will be in tomorrow. So thank you again for being here with us. You guys have a great and wonderful day. Hopefully it's nice where you're at and you can hit the golf course. Take care. See ya.